Hey, good morning, good morning. Gold looks like it's having some kind of retracements on that daily. It took out the previous daily lows, but still quite interesting to see how it's moving up. We're just shy of 3600. 3600 here is only about from previous daily highs, really not that far off, like 200 pips, 216 pips. We could see 3600 today. I think that's what the target is going to be there on the daily. Man, September is crazy month. So much volume too in September. Well, take it. You held your trade this morning, 3%. Yeah, this was... You see the thing about this? It was just not even hard to hold at all because price just completely nutted. Like, it was a momentum, you know? So, I think it's much easier to hold in a situation like that. Kind of like the way from yesterday's trade, how fast it moved up. So when it's moving up like that, obviously, you know, there's definitely still more headroom. So whenever you see a candlestick move like, let's say, really fast, there's usually definitely a little bit more headroom. It's not gonna just like, you know, stop like that and come down. So yeah, that's definitely... Actually, I saw 4%. I think I actually saw like 4% on this move. You know, I was not quick enough to close. And then there was so much volatility, then it came down again, down to like, you know, 3%. I was like, okay, let me take this. I saw like 1,700 and then it kept coming down. And then I'm like, damn, let me just take this. Those are the easiest trades. So that's why I'm hoping like, that's what I was expecting for September because of all this like volume we've been getting in. But definitely just technically speaking, it's been a difficult month, although the opportunities are there. So it's a little bit different from these previous months where it's like, I guess maybe easier to be disciplined. But you know, when there's so much volume in the market, you're always thinking to yourself, okay, you know, I just took this trade, you know, like we did this morning. First trade was a loss. Now, okay, man, there's volume. So if I'm just patient and I wait for the next move, I could probably catch the next move. So that's the type of opportunity I think which comes with these types of months. So yeah, that's why I guess this month over here was the first month in a while that I actually took a fourth trade. It's been a while though, like it's been hard to catch like consistent gains, but when the play does play, it has really nice pushes. Man, like yesterday's trade, I was holding that trade, but I was not gonna let it become like a losing trade. Worst case scenario, super worst case scenario, maybe I secure like 1%. You know, I was already up 2% by the time TP2 hit. So I was like, anyway, let me just hold this because there's a lot more upside. Because you know, when you're thinking about in terms like a risk perspective, there's a lot more upside than downside, you know, especially if prices are already moving up. Where did we take the buy? Yeah, we took the buy right over here. Right over here. What was it here? I felt like the push was stronger. Yeah, I think it was there. Yeah, it was there. That was the all-time highs right over here. So there's certain ways you can also gauge risk in terms of when you're also in profit. So it's not always like when you're in drawdown, but even when you're in profit, you can gauge risk. Because if price is moving, you know, what's the chances that price continues to move up in a situation like this, shy of all-time highs? Or you can like secure it's like 1% and just let the rest run. Also, like the sell here that I took, if price is already moving and moving really quickly, you know, there's a better probability it gives you a little bit more pushes. Because majority of the time, I think as traders, especially as scalpers, we're definitely closing too early. But you know, too early, what does that even mean? You know, we're just closing, I guess in the general sense of it, too early. But you know, in quotation, too early. There's never really too early or too late in the market, you know. I still feel like, even though we're down so heavy, well, we're down so heavy because of volatility. So I'm not sure if this is like really a trending day. We can say trending bearish. I guess it's just because of the amount of volume in this market right now. I would still not be surprised to see gold like flip. I would not be surprised to see gold flip on the daily. and continue to move up bullish. I only need to push up like 200 more pips. Hey, doctor. But it's not bullish today. Yeah, not yet. But you see, there's always that small little, how do you call it, tangent of bullishness that can come in at any moment. If you look at that daily, that's the thing about the sellers. You know, what's the probability this candle just sells off? We have not seen a bearish candle in the last 1, 2, 3, 4, 5, 6, 7 days. It can play with psychology because you gotta look at it now and say, oh yeah, it's bearish. But you gotta look at the chart at the end of the day, then it's another bullish candle. Well, yeah, yesterday as well was awesome. We finally got volume in pre-NY. Finally. But obviously the move continued with New York. New York gets the larger chunk of the moves. See, New York, because I think, yeah, it mitigated these entries. See how the market came back to take out these previous buys that we took? It mitigated our entries. Then it continued moving up there with NY. NY type. Yeah, NY is getting the bigger chunks of these moves. NY and Asia. NY and Asia. But at least pre-NY yesterday was looking a lot different than usual. Gotta say that, at least. I hope for the next months we get a little bit more of that action in the London and pre-NY. For October, November, December. Surely it can't just be so repetitive for the last quarter. Asia and NY. We gotta see some of that action. Even pre-London. It would be nice to get some of that pre-London. But I guess today we had a bit of a pre-London direction. But not a trending type of direction, unfortunately. But just more of like, could give a directional bias because we were down so much. I was surprised to see we were down like 0.80% in pre-London. So I was like, you know what? These sells maybe could play out. This sells could really play out over there. Because this was the range I was looking at, down towards 35.15. So definitely sells for pre-London seems to have been the move. There were a couple buys as well. You know, on the first trade, there was a reversal signal. There was a reversal signal. So there was a buy in there too. Hi Vic, are you live trading NFP session tomorrow? Oh no, I don't know about you, but I love my money. I love my money. I don't like to risk my money on gambling trades. Today we have ADP and unemployment claims. Unemployment claims, ADP. Tomorrow we have non-farm payrolls. Let's see what we're expecting here. We're expecting good numbers for the US dollar, which maybe we're going to see a bearish gold during NFP tomorrow. That could be a possibility. Yes, sir. So that's it. Maybe you're gonna see gold dump it. That's crazy, man. I would not be surprised to see how many trades we're gonna take at the end of this month, to be honest. We're already how many trades in? 13 trades. And it's just the first week. 4 trading days and 13 trades. Damn, I think this month we're gonna take a lot of trades if it keeps going like this. Like, trading is the hardest way to make easy money. Super hard. Super hard. Not gonna lie, if we lost this trade yesterday, man, that would have let me down. That would have let me down. But you know, it's like, the thing is, like, price can't fake out all the time. Usually it just has to fake one direction, and then there's always a higher probability that it will if you get a good read on price, that it will keep moving. It will keep moving. It shouldn't, like, the market shouldn't be that aggressive. Where, for example, this hourly candlestick You know, we took a buy over here. That this hourly candlestick would now do this and then come back up there. It's not always that aggressive. But you know, the thing is the market does so much emotional damage on you that you start to lose trust in it. That, you know, at some point, it becomes very difficult to trust it. But, you know, it's not that serious. I think it's just doing like Tuesday/Wednesday, pushing back to entry from consolidation 5 minute. Breakout to move up. It's currently trying to fill up this range on the left-hand side. Look at this. Boom, boom, boom. Coming up towards 35.46. I think that's going to be the range. 35.46. By like roughly 50 pips. Was the last trade you took consolidation on a 5 minute swing? Oh, that was consolidation. I'm trying to lock into the consolidation plays again. Remember we had a streak of consolidations? I think this was... Yeah, when was the last time we just focused on consolidations? Been consolidation and shotgun for the most part. The last time was in May. So I kind of want to focus a bit more on consolidations. Just because of there's so much volume right now that if you focus on consolidations, at least you kind of know... what I'm doing is if price has to give me a hard time, I just close the trade. I'm just gonna close the trade and save some little bit of money every now and then. Because of the way markets are moving right now, it's like it shouldn't give you too much of a hard time and just keep going in your direction. But it gives you like really hard time, every now and then I'm just gonna be closing. So let us see. Inverted head and shoulders, possibly. Potential breakout. Potential breaky. 0.58% there on the daily. Negative 0.58. I reckon this daily wants to flip. I reckon this daily wants to come back up here. Let's buy. Market open 35.58. Yeah, we want them pops up. Then can say wham bam, thank you ma'am. Bazinga. I think let's see. I'm at BE today. 1L 2 win. I reduced risk on the last two, so BE. Still struggling with holding them. Missed 2 trades for some pips, but that is normal. Let's see, 1 minute. 15 minute, looking good. Little break and retest. Got a small little resistance over here. Next resistance all the way up over here. Got about 12 minutes for 15-minute candlestick to close. 30-minute kiss of death. Small break and retest off that zone. Kiss of death on the 8. 1 hour is looking clean. Kind of battling with a 1 hour SMA there. It's a 1 hour 8 SMA, but the range looks beautiful. You have about 196 pips to the upside. I think what the market is telling you sell. It's telling you sell in the higher time frame, but or actually, what am I saying? Yeah, it's like prices move down. People would want to sell, but they know the overall trend is bullish. It's kind of a funny situation this is. Because technically speaking, at 0.60% right now would be good for a sell continuation. But when you consider the overall volume to the upside, it's like the main direction definitely is still bullish. Because if you see, it's like a small little liquidity situation that happened down here. Broke below support. Look at that ginormous wick down below this area over here. And then it pulled all the way back up to respect support. Then you got a small little fake out situation that happened in there too. And candlestick just closed like a bullish engulfing candle with clean range on the left hand side. Also, this sell over here failed. This is like a small little London open fakie. Little V-shaped reversal back in. It's also starting to wick a lot. You know, the thing is, like, we've had so much volume during the Asia session that sometimes this session here can just range, like have a nasty range with loads of wicks. Because majority of the volume already came in here. This is like insane sells. Sheesh. Imagine still holding this. Oh, okay, I see. It came all the way back up there. It mitigated. Most people will be taken out here. That was the first play, the first entry confirmation sell on Asia session. They can get a buy over here. Possibly there's a buy here. That looks like a little buy situation. Reversal confirmation signal to the downside. Man, those reversal confirmations are actually quite juicy. Should we just start trading reversal confirmations on stream? Those are actually really nice. They've been really nice of late. Well, a reversal confirmation, you don't always like, you gotta wait for them. You know, if it comes, it comes, and if you see it, awesome. Then you can take advantage of it. But it's not always coming. Like even yesterday here, okay, so yesterday kind of is, but this is also just a setup in line with the trend. But these buys and then these buys again that came here and here. Gonna be a reversal from this play. Price came down, consolidate, pull back up, consolidate, continue to move up bullish. Man, that means you're gonna miss moves if you're waiting for that extra confluence. %1 profitable traders' knowledge of doing work below. Imagine a sell from 77 to 11. Can you imagine? Can you imagine that? All this reminds me of Kanye West. There's this interview with Kanye West and Kim Kardashian. And Kim is like, can you imagine we don't have a jacuzzi? And Kanye West is like, can you imagine? Can you imagine we don't have a jacuzzi? I swear the Kardashians too funny. Can you imagine we don't have a jacuzzi? Living in this LA mansion? Yeah, let me play the clip.
Never used our pool, actually. What? Yeah, can you believe that? But I love our pool. You know, we don't have a jacuzzi.
Can you believe that? Can you believe we don't have a jacuzzi?
I wonder what is Kim's problems on a day-to-day basis. Can you believe we don't have a jacuzzi? Missed 2 trades. Yeah, so this is a range nation. Bunch of wicks, sideways movement, just spinning. This is definitely where people are gonna get most of their whips coming in. So we're gonna label this here. No trade zone. We got what, 5-minute resistance? We got 5-minute resistance right here. Chilling. What about the US numbers coming today? Could be an impact. Yeah, definitely could be an impact. This is going to be from the New York session open. That's 15 minutes into New York. We got ADP numbers here. We got ADP numbers and you got unemployment claims. Definitely could be an impact. So, man, the closer you get to this, you want to be off the charts. You know, you don't want to trade ADP. Like, this is just ruining it. Because, you know, like, how can you trade a strategy and a technical analysis plan towards markets and then trade news? Like, those are two different things. At least with technicals, you can manage your trades a little bit more efficiently. With news, you can't do any of that. You're either going to make a lot or you're going to lose a lot with slippage. You know why people trade news? It's out of desperation that people trade news. I imagine that's what it is. It's desperation and greed is the reason why people still trade news, because it's easier to catch like these fast, quick moves. But those kinds of people, they can't catch them like in normal conditions. So they rely on the fundamentals. It helps them pass maybe challenges faster if that's the case. It's like a shortcut, basically. It's a shortcut mentality. But everyone knows what they're doing is wrong and risky, but they still do it. Full port. It's easier to full port. If you're in drawdown, if you've been taking losing streaks, it's easier for you to full port because you just might make it back with a full port on an ADP or an NFP. Because, you know, at some point you're just like, man, this account, it's taken so much of a beating, you know, it doesn't even matter anymore. You're willing to even blow their account just to get it back up. But that doesn't work in the real world. In the real world, when you do it full time, you're not gonna have luxuries like that. Because if you blow the account, it's back to applying for jobs. You know, so that's why I think like it's already a good idea to have a good mentality towards already imagining yourself as a full-time trader. Like, would you still take those risks? Can you even afford? I think the question is, can you afford to take those risks? Some people can afford. You know, if you got like fun coupons and you just want to have fun, like you can load up an account just to blow. Then I think, you know, that's fine. That's fine. Every now and then you can have a good hunch on the NFP numbers, and then you're gonna say, oh man, this is definitely a buy or definitely a sell, and then you're gonna take a position. Every now and then I think, you know, that can be fun. We used to do 0.01 lots on news trading. So worst case scenario, you know, nothing could go wrong. Unless you mess up the lot. You know, the thing is, like, you can sometimes mess up the lot sizing. Sometimes when things are happening quick, instead of 0.01, you might end up putting like a 1 lot. So it's always some kind of risk. How far will gold fall and best area to buy? Maybe best area to buy would be above resistance here by 35.40. Because right now the market is not really directional. It's just consolidating, as you can see. Actually, it's consolidating quite a lot because we consolidated here. We did a fake out. So we had boom, accumulation, fake out below, and then it came back up, and it's like a step up higher than this. But this is still consolidation in both cases. Which the market is doing in 90% of the time, which is nothing. I think those offshore brokers with 200x leverage, it's actually pretty profitable if you hedge properly. Oh, you're talking about, okay. What mistakes do you still make while trading? How do you calculate risk and loss size so fast? You can use apps. You can use apps to calculate lot sizing. I use an app from tomarkets.com. That's how I calculate my lot sizing. You can use tools, you know, like there's softwares on CTrader that you can use as well. Or you could have a fixed lot size for a certain amount of pips. So, you know, if let's say 5 lots at 10 pips, and then let's say now you have a stop loss of like 20 pips, you can use half of that 5 lot size. You know, there's ways you can do it. There's ways you can do it. It's all up to you. Like, which one do you feel is like more comfortable for you? Are you doing price action or SMC/ICT? No. I never learned SMC, like ICT ever. Like in the first year of trading, I never heard of ICT. Which is, you know, looking back at it now is kind of crazy. Given that the guy has like, I don't know, millions of subscribers and such a cult following. I never heard of ICT for some reason. It's so weird. Because, you know, the thing is, like, I was mainly focused on the people I was learning from, like, kind of more smart money concepts, but these are like more mature guys. Not these Lambo, Raul, or not these guys, but like I was looking for kind of more mature people. You know, so I never came across like ICT, so I was learning kind of differently. I was learning like price action, candlesticks, which is, it's been a blessing in disguise because a lot of people fall, you know, if you're like part of a cult, then it's like, you know, it's hard to get out because your mindset is already set on trading those systems. Content King, thank you for the sub, man. You remember me? I was in a loss, so I took a break of 1 month from trading, did demo trades, and now I'm back again after a month break. Let's go, Lord Chester. It's nice to hear that you're back. You know, I always say learn how to rest, but don't give up. Don't give up. You can learn how to take breaks for yourself, but just don't give up. Break every now and then. Couldn't hurt. Provided it's not like a super unproductive break. Because if you take too long of a break, it's kind of like you lose that momentum. You know, that momentum, you never want to lose momentum. Momentum is a key thing to achieving a lot of things. You cannot lose that momentum. So the breaks can't be too long. And you should be doing something at least proactive during the breaks. Can you recommend TradeZilla backtesting? Can I recommend TradeZilla backtesting? Now, I'm not sure if I didn't know they had backtesting. TradeZilla. I thought it's just a journal. Isn't TradeZilla just a journal where you can just manually add in trades? And then kind of like have some statistics on your progress? For backtesting, it's like you gotta use, you know, maybe TradingView. You can use TradingView or you can use forex. Yeah, I think it's pretty good. I think it's, you know, okay, so my mindset is a bit different now. My mindset, it's not to do more with data. I think what you're maybe referring to is some kind of program that shows you a lot of data with win rate and all of these other metrics that could prove to be useful. For me, I'm just trying to see if like I can keep executing consistently on my edge. So if I run through a simulation on forex, it's kind of like also enough data for me to see. Because I've already been doing this for such a long time that it's just enough data for me to see if things are still operating properly. But of course, I don't think the market can ever stop operating properly because it only moves down, sideways, and bullish. It's only maybe you're going to have some times in the market where it's a lot more, just slightly a bit more aggressive, but eventually price would need to distribute and move somewhere eventually. But you might have some times in the market where the times that you're trading are just a little bit sketchy like this. You see like how there's a lot of wicks and consolidation. That's the only thing that you really have to look out for. But that kind of irons itself out over time. So when I do backtesting, I just want to see if my strategy is still performing. You know? Because if you can run a simulation right now and do one whole simulation for a whole month, do you really need like... yeah, I mean, the metrics are going to help, but do you really need the metrics? Like if you can run a whole simulation for like a month, even a whole quarter, and then look at your P&L at the end of that, I mean, it's pretty good. that's telling you you're already profitable. Problem with metrics is sometimes that can play with your psychology. You know, it's it can hinder you from certain progress. When you focus, it's just the same way if you set yourself a goal, like every day I must hit this goal, every day I must hit this goal. It's going to hinder your progress because you're thinking too much about the goal. You're thinking too much about those metrics. You know, so it can mess you up sometimes. But for me, I think my hit rate is somewhere around 70+%, 70, 75+%. But the most important thing is the risk. So you're keeping losing days, small losses, so you can make those back up in the winning days. That's the main thing. And every time I set myself a goal, I always miss that goal. I always miss that goal. Like in June. In June, I said, oh, the summer months are going to be great. And then in June, my first month was like 11%. Next month was pretty good, though. Next month was pretty good. But in June, I had mentally set myself a goal. And then I fell short of the goal by 50% more. 50% plus. So just trade. Just trade. Enjoy the process, enjoy the craft, and make sure your risk is in check. Funny how my strategy failed throughout July and came back stronger in August. You inspired me to believe, and so far I'm seeing little positive results. Thanks, man. Welcome, Stanley. It's character development, it is. That's all it is. That's what we need. 8 minutes for candlestick here to close. On the 15 though. Look like it wants to start distributing again to the upside. Slowly but surely giving back gains. Down 0.54%. Nice little fakey below here. Pull up, break, retest. Break above structure and then continue to pull up towards that daily open. Because you also got some sellers. I believe the market might be looking to mitigate all the way up over here. Already coming to this area. It already tested this area over here. That was when the last impulsive move to the downside was. Boom, retested, mitigated. So it's never forgetting. Like you see, that's the thing about the market. It has a memory. It has a memory. It doesn't forget. So that's why we're looking at these clean ranges. It's also part of the idea of these clean ranges is the market will have a memory to recorrect these ranges. You know, in situations like this, also you're going to have people who have got it into sells and then they're getting mitigated. So that's also partly the idea to clean ranges. But yeah, now we're just getting sorted, getting ready hopefully for some kind of a move. We gotta move from this area. It's a shark infested waters here. Dude. Shark infested. Need to use a phone in a formation of accounting on the PC for some credits. I'll need to leave it running. I was wondering what happened here with that profile picture. The golden canary. What precious metals are saying about the economy? Wall Street veterans used to tell their underlings and their clients as well. That the bond market is a daily referendum for the government. It is facing competition now. Oh, bullion prices have risen nearly 38% so far this year, topping 3,500 an ounce for the first time this week. US dollar meanwhile suffered its worst first half performance in 5 decades. Yeah, the dollar is already going down. I'm just seeing my dollar bank account depreciate. Dollar is already starting to feel the effects in the real world. It remains pinned near the lowest levels in 3 years relative to basket of its global peers. Man, dollar is gonna take a beating. You know what sucks? I'm expecting some good money to come in at the end of this month. At the end of this month. And we have the rate cuts in September 17th. Damn. It's always like that. It's always like that. When I'm expecting good money, for some reason, something in the economy has to fuck off. You know, and then it depreciates. Like the last time that was with the dollar. The dollar was pretty damn high. And then we had a dollar crash. The dollar crash, I think it was sometime, was it last year or the year before? We had a massive crash on the dollar. Like it lost so, like if you're doing business during that time and you didn't account for that, oh, you would have lost so much money. So much money. My brother actually lost a lot of money. You know, my brother lost a lot of money because of that. Because you get paid afterwards. So you set a deal. You tell someone like this is gonna cost this certain amount, and it's fine then. But then it's like now when they're paying you, it's no longer at this price. It's gone down. The dollar value of the dollar goes down. So that's what we're expecting to see happen on September 17th. I hope it doesn't affect it too much. Let's look at the DXY though. DXY should still be on the way down. Right now, let's go on the daily. Yeah, daily is still kind of holding a little bit. It's holding a bit, but yeah, but it looks like it wants to come down here. It's more like a little break and a retest for price to continue pushing down bearish. Damn. Need to start holding euros. Euros are more stable. Tradezilla has backtesting now, and it gives you all the data and journal for the test results. It's definitely worth a look. Lost 200 pounds last week, made 270 this week. Nice one, nice one. Hey Derek, good morning, good morning. Just tune in while working on other things. Always welcome, sir. Let's look at the currency strength meter. I think it should be... Oh, dollar's strong. Dollar's really strong today. And gold has been moving down. Makes sense. Yeah, pound is also doing quite well. Yen is weak. So pound should be bullish then on the daily. How far are we up? 0.05%. Oh, look at this. We're still flirting with 200. Man, this 200 psychological mark is definitely giving pound here a hard time. It's like an invisible barrier, this is. 200. See, this is the importance of dynamic support and resistance. So I think you can beautifully see it here in the pound. So you got dynamic support and resistance, so the SMAs. And you see, that's why you got SMAs and also psychological marks like this. Dynamic support and resistance. So it has less to do with the structure, but more to do with the overall zone. Let's see, do we have anything here? 35.40 on Goldie. What is the outcome of the poll you conducted regarding TP1 and 2? We're gonna keep TP1 and 2. We're gonna keep both of them. That was the outcome. Yeah, we'll keep both of them. Just realize how much you're very comfortable losing trading while becoming easier psychology. Yeah, I'm okay. I'm very comfortable with losing trading. I'm very comfortable. The reason people are not comfortable with losing trading is because they feel like they're gonna get judged for that. Or maybe you're gonna judge yourself too much. But it's okay, you know, it's part of the game. It happens. The thing is, like, it can hold you back. That's a problem. You know, losing positions can really hold you back psychologically and make you feel very demotivated. That's why I said, like, if you're gonna start this journey, man, just take it easy and enjoy the process. Because once you're gonna have a hard time, like, man, for me this month, it's been a hard month for me. A hard month. But I've always trying to, like, make sure that I keep a clear mindset by, first of all, managing my risk, even if I'm over trading. And just, like, making sure every single trade I take, even if it's like an over trade, that I'm going to take it based off the fact that I'm already comfortable losing it. So every time I take a trade, I've already forgotten about that money. You know, it's like when you give a friend money. When you give a friend money, you forget about that money. You know, you just think of it as a donation, basically. And I think that kind of helps me stay in the game. You know, but if you're too emotionally attached, then it can be a problem. It's quite difficult to detach your emotions as well. Like if you see the trade we took yesterday, I was really emotionally attached to this trade because that was my fourth trade. That was my fourth trade, and I really wanted it to be a winning trade. So it can be difficult, but you have to just work on that, accepting losing outcomes. That's it. You just got to keep going because, you know, what you're doing is you're kind of trusting your statistics over time. So this portion of it, maybe you might have a difficult time, but what you're really looking at is the long term. The long term. So you always want it to be something that you can at least recover from. Yes, is order block plus end of FVG. There's sold from there at first touch, but only held 10 pips. I have a problem with holding my trades to TP till TP. I always cut profits too early. Yeah, that's a problem a lot of people have. I would just say, just hold the trade. Just hold it. Just hold at least one trade. If you take like 2 trades a day, hold at least one trade. And put your stop to break even. Where would you normally be securing, you can put your stop to break even. Especially in these market conditions, you're going to have chances to hold really nice trades. Because of the volume that sometimes randomly comes in. You know? That random volume, man, that's the best. That's the best. And the market gives you an extra 15 pips in like literally a second or two. Extra 15, 20 pips. And that volume usually tends to come when you're thinking about securing. So if you just held a little bit longer, that's usually when it comes for the most part. But you know, you could already practice by either having one trade be a running trade at break even or closing 80% and then just letting the small portion of it run as you get used to leaving positions to run longer. Gold drop of the 500 points during Asian session. Think it'll range? Yeah, exactly. That's what we're thinking here too. Usually it's like that. When you have a huge move during the Asia time, usually the London is more prone to ranging. Yes, sir. But holding is just holding, you know. There's some psychological barriers we put for ourselves that also, you know, when we really think about it, doesn't make so much sense. You know, like, oh man, I have such a hard time holding. You know, if you break down what holding is, it just means to let go, right? To let go in the sense that you are going to hold for longer. You just have to let it go. Let the price go. It's so hard to let things go, huh? So hard. The market will reveal to you more than just your strategy. It will reveal to you your personal, maybe you got some personal behavior over there. Maybe you find it hard to let things go. I don't know. But you know, like when it comes to holding, maybe we all have like some kind of issue with holding. Maybe uncertainty. A lot of uncertainty. But the best way to deal with uncertainty is put your stop loss to break even. Worst case scenario, you lose nothing. That's the best way. I think that method works for everybody. Stop loss to break even. Simple. That's it. Worst case scenario, you lose nothing. And you have everything else to gain. You know, because look, if you think about risk operates very differently, yeah? So for example, this is a best case scenario because this a trade that we took here yesterday. And like, if price is already up here in the beginning of this, when you first do this, okay, you first get into your trade, high risk, because you know, price has not moved anywhere. So now this is where you're going to have different stages in mental game, right? This is a high risk stage. You're like, oh man, like is price really going to move? I'm thinking about all-time highs over here. You know, this is still high risk. And the more the candlesticks print, it gives you options to either reduce your risk or you can just leave it to be open. So let's say if you have an option to reduce your risk, you're taking off the risk. So you're taking off stress off the position based off the structure that's formed. That's going to tell you that now it's a good time to reduce risk. So, you know, then the mental game also shifts a bit more. So instead of like losing 1%, now you're thinking, okay, we're losing maybe 0.5%. So you don't feel too much emotionally attached to the position. But let's say you don't manage your risk and you're still like this. And then price moves up. Price starts to move up. You know, by the time price is here, let's say if this is where you wanted to secure, the risk has changed at this point. You know, forget about this. This is in the past. Your entry is in the past. The risk that you took is in the past. You're basically in a stress-free trade at this point. Like anything could have happened here. You could have won, you could have lost. But the risk has changed. You're in a stress-free trade at this point, if this is where you want to secure. So what I was thinking, what my train of thought was, okay, you know, worst case scenario, if it retraces back to 1%, I'm going to at least get paid for this move. Best case scenario, I have a lot more to gain. You see, so if you look from a risk perspective, it actually makes even more sense to hold in such a scenario like this, because you have a lot more to gain and a lot less to lose, because you're still going to make some profit from the trade. Worst case scenario. So you've already had the most strategic advantage on the market. So that's how you can think about holding your trades. Think about it from a strategic position like this. You know, that's how I would do it. You got the upper hand. The market had its upper hand down here. Now that shifted towards giving you the upper hand. So, you know, if you can calculate variables like that, and you become a little bit more flexible with your trading like this, I think you're going to better understand, like, it's not such a big deal to hold positions. You know, it all comes down to risk management. Like, that's why we say a risk is discretionary. You know, we all perceive risk kind of differently. But I think that's a pretty nice example there to help you kind of understand why it's not so bad. Why holding is not this thing that is so bad. But you gotta pick your holds wisely. You know, you gotta pick them very wisely. And I think the thing is, like, once you get a bit more experience, you get better at picking them wisely. You know, because you kind of understand, okay, you've got a pretty good like this morning I was like, guys, we gotta sell over here. We gotta sell. This is a freaking nice probability for a sell. So you can already start to see certain things based off your experience of what could potentially happen. First trade I took, L. Second trade I took, beautiful. It pushed with so much volume that I ended up getting paid even more. I was not even planning on holding it like that, but man, when the market pays you, it pays you. You know, if it just wants to keep paying you, you're not going to say no to that. It pushes so quickly that you can't even close at where you want to close. In my head, I lose profits. Yeah, you gotta lose profits, but that's why I said, like, this nice little example of a guy. Let's say if he starts with 10k, and then this guy makes let's say, how much? 30k. Let's say he's floating at 30k, but then closes at 20k. So did he lose 20k or did he make 10k? You know, because he was up at 1.20k. So did he lose 20k or did he make 10k? His starting balance was 10k. He still got paid something. You know, he just tried. He just tried to go maybe for 40k, but it reversed on him at 30k. And he still took something out at 20k. You know, he still made 10K. Bro, advise me to how many pair to focus. I would say focus on like 1 or 2 pairs. Focus on 1 or 2 pairs. If you're going to focus on just solely 1 pair, at least make sure that pair is moving. You know, if it's like gold or something, gold spot moves so nice. You know, I can afford to look at just 1 pair with gold. Like this whole year, I've just been trading gold. This whole year, I've been trading gold, basically. Man, look at this. I haven't deviated from gold. Last GJ trade was here in April 17th. But, you know, all these other trades, they're all just gold trades. So I'll focus on like, if your strategy is like scalping and intraday trading, then you could get away with just 1 pair. But if you're a swing trader, you might need to have a little bit more in your portfolio because it will take days. You know, it takes longer for those setups to play out. So you might have to diversify a bit more. I see your pre-NY trades really run. Ever thought of holding 1 to 10? Yeah, I used to do that. I used to do that when I was still building my account before I was on social media. I was just trading discretionary and I used to hold my trades like that. That's why I like these 1-minute plays, is because you get those crazy risk to rewards in them. But I don't do that anymore. But you can get, even when we started streaming, I don't know if you guys remember, like even when I started streaming, remember I used to post my trades like this. If we could scroll back, I used to post my trades like this. And I used to show guys like, man, look at this thing. It ran like a 1 to 10, 1 to 20, you know, 1 to 20. But people were like, you know, this guy is just posting like, it's like, you know, we didn't get a very good reception from that. So I was like, okay, fine, let me just stop doing that. But, you know, I was used to doing that because like that's what I used to expect. You know, all my trades used to run like 1 to 10, 1 to 10 plus. So I used to expect that happening. So I was like, man, I thought this was normal. I thought this was normal. But people were like, not to show it, because if you didn't hold it, something like that, if you didn't actually hold it, what's the point of showing it? But the idea of showing it was just to show you that it can run that far. Because, you know, if you have that data for yourself, that's usually is what's helping you hold your trades, correct? But if you don't have that data, maybe you want to look back one day. Maybe you want to start holding trades and you want to look back, then you realize, oh man, I don't have any data for this. Now you're going to have to start collecting that data. You know, but if you see something like this and you have pictures of how far it's running, then I think it's really good for you to gauge. Because sometimes you might need a bit more pips. Like sometimes if let's say you're having a struggle to like losing trades, you might need to hold some trades to kind of quickly dig you out of the hole. So it does pay to look back at your progress and see if your trades have really been running and how far they've been running, so you can get a feel for the market. Because if you look back at your progress and maybe you're not having too many runners, then maybe it's not even a good time to be thinking about holding trades as runners. So I think data is always kind of useful, you know. But yeah, definitely you can run. The only way you can catch those trades is off, from what I've understood, it's off the 1 minute. Oh, look at this, 124 RR. Yeah, this is really nice. You got basically no drawdown on this. And I think it's like when you're trading on the 1 minute, you open yourself up to more chances to catch, ooh, got stopped out here, to catch these bomba clot trades. If you look at the 1 minute, because you know these big moves, they all come and stem from the 1 minute. Because if you're looking even at the 5 minute, you wouldn't have enough data over here. You don't have enough data over here to get a nice stop loss. You know, it's kind of harder to work with these candles. But if you go on the 1 minute, maybe you can see something else. So like a little inverted. This is this is basically the same thing Derek took yesterday, kind of shaped up a bit differently. And even that regular 16 pip stop loss that I use, if I want to have like a good risk to reward, potential good risk to reward, 16 pips maximum. And then price would have moved up about like 7.5. So the way you'd be reading this, also this is a trade Ricardo took I think it was this week, sometime this week. You took it earlier. You took the breakout earlier, but the idea was like something similar like this. Like that's consolidation, and then that would have been the fake out that happened down over here for price to move up. Decent range to start off with. It's always nice to have a little bit of decent clean traffic to start off with there on the 1 minute time frame. Yeah, but this is it. Let me see if I can find it. Here's Derek's trade from yesterday. So you see it's like the same thing, same but different. Right? Same thing, same but different. So you can see this. See, you gotta let that imprint in your head. Because these are like the patterns which helping you, you know. This is how you're kind of looking at markets when you have a system. Because you're already expecting a certain outcome from certain patterns. Google YouTube is down in many countries today. Oh, really? Let me see. YouTube down in many countries today. No, there is no widespread YouTube outage today. That's September 4th. Doesn't seem like. Oh, candlestick shotgun entry. Candle broke above resistance. Didn't even realize this. 5 minute candlestick just opened up. 2.5 pips into profit, please. Oh, you got it? Nice. Didn't even realize that. The 5 minute just opened and flew up. Look at this. 5 minute here just opened and pushed up. Pushed up like 20 pips. Goal approaching my 43.5 mark. So open up with so much volume. Oh, right. New hourly candle just opened. Yeah, that's a nice trick as well, actually. Now that we're seeing it here. I sometimes use this trick if I'm expecting, if I really want volume for my plays. I'm always gauging that hourly open. This is what sometimes happens at hourly open, because hourly is higher time frame. So it can push nicely if you're on a lower time frame entry model. Like this one here, the stop loss was only about like maybe 16.5 pips. Yeah, it pushed up here. It's already off to the races. 35, 45. Hey, Jimmy, thank you for the sub. How to limit impulsivity and seeing entries with every move. What I think people usually would do is wait for a candlestick to close. To limit impulsivity is to wait for a candlestick to close first. That's usually the case. And you get a bit better of a confirmation. Like, if you wait for candle to close first, it's always good. You know, if you can have the luxury to see that happen first, it's always good. Because even on the 1 minute time frames, you could still wait for candlestick. If you're trading like a breakout, let's say if you're trading a breakout system, and now the candlestick is pulling up like this. Let's say on the 1 minute, your 1 minute candle is putting up like this, but you want to limit impulsivity, so you want to see how it closes. Maybe you want a top wick and then a re-break. So as it's breaking, you don't get in, but as it's breaking, you have to accept the fact that you've already missed the move. You can only limit impulsivity if you're accepting that you've already missed the move, you know. But if you can't accept that, then you can't wait. So next time you're trying to do like a breakout, maybe if you want to be extra cautious, just wait for the 1 minute candle to close. Then you say, okay, close like this. Because you know what sometimes happens is sometimes it breaks like that, and then the next candle does that. And then that becomes a liquidity grab. So you could wait for the break first, and then wait for the next candle to re-break the previous candlestick highs. You know, I think that's the best way. At least now you're sure that the market wants to continue moving in that direction. Because usually also fake outs on the 1 minute time frame, they usually happen with the first, they tend to also happen with the first breaks. But if it re-breaks, then you know you're good. Oh, we're already up here. Damn, we've already filled this range. Price has already filled this range. Oh, so Luke got it. Open up so much volume. Couldn't get stuck in. Jumped too far from entries. It still has no bottom wick though. Might still reflip. What's the reason for that loss in P&L? I think the market was just not yet ready to move. It was a good trade, but the market was not yet ready to move, so I had to wait for it again. I wanted to give it a second chance over there. So I was thinking like price can move down from here to here. So I was already looking at this time as a time where we could have gotten a breakout. But instead of breaking, it pushed a bit and then came back up. So then I just waited again and I gave it a second chance. Because to me, it was looking so bearish. Like the daily was down 0.80+%. You know, we had beautiful accumulation over here. I was really looking at this volume that was coming in. So I was like, man, if I catch a move, it's gonna be a real nice volume play. Because the way candlesticks were just completely dumping. That was the idea. So I think, you know, it worked out in the end. Do you have open trades during sleep time? I can't do it. Yeah, me neither. No, I don't. I used to, but I don't anymore. So much stress, huh? 24/7 stress when you have positions open during sleep time. So even when you're meant to be resting, your brain subconsciously is thinking about that trade. You're thinking about trading 24/7 when you're sleeping, when you wake up. When you wake up, it's like the first thing you do is looking at your phone really anxiously. So you're waking up, the first thing you're waking up to is like anxiety, you know? Anxiety is like, did my trade play out? Are we in drawdown? Are we in profit? It's not a good way to start the day. Oh, sick. You got even earlier entry. Minimal drawdown. I think like for a trade like this, you know, holding a running trade like this, what you'd be expecting is for price to break above these highs. Because if price breaks above those highs, then there's another range here of 100 pips. 100 pips, but it needs to get through resistance. Because at this point, it doesn't make sense making this a losing trade. Because this has already filled up the range. It's filled up the range to 35.45. So best thing was always to secure something and then let the rest run. NY has been having good moves. We locked in Goldvic. Yes, Brian. Nice one. NY traders for sure have been having it quite nice. Should have just taken a buy, a swing buy. Shoulda, coulda. Let's just take like a buy over here. Just take a buy and then forget about it. Ooh, nice. Wait, you caught this move too? Awesome, awesome, awesome. Little break over there for the sells and a buy right here. From the 30-minute shotgun is a big range up. Let's see, 30-minute shotgun. Oh, yeah, from 30-minute shotgun, true. That's already in play. So much momentum there. That's why I said, like, this bearish move, it just doesn't seem right. It seems like it's just some kind of a retracement. Retracement, daily bottom wick to re-break and then continue moving up bullish. Gonna remove this line over here. Where we're trading at now. 35.45. How about B after 2 pip, 3 pip move, effective in long run? I don't know about that. Like that's pretty. That's like the market basically hasn't moved at that point. But look what you can experiment with. You see like how these trades can just move in your direction like this. Then you will wait, say this was mine. Oh, nice. This is, let's see. This was a buy off the 1 minute. Oh, it's on the 1 minute. Boom. Where are we currently at here? Candlestick 1, 2, 3. Secured right here. Because yeah, I think that's good. That's a good exit. Because we're coming up to that daily that resistance there. But you see, what I think you want to say, maybe something like this. Prince, you're thinking maybe like price moves a bit like this and then straight to break even-ish. Because now you're just trying to catch like smooth entries, right? It could work. It definitely could work. You could experiment with that. Like I've seen that happen enough times. Because these are usually your best trades. Your best trades are usually the ones which just keep going, correct? So this could be a good risk management thing that you could experiment with. So the moment you start to see some kind of percentage in drawdown, maybe like even 20%, 30%, then you just close out your trade. Just always anticipating the volume to be coming in like this, easy trades. And still sticking to maybe like 1 or 2 trades a day. So actually at the end of the day, you'd have actually really managed your risk. You know, your losing trades are going to be very well managed, and your winning trades are going to have a lot more upside than your losing trades have downside. So you definitely can experiment with that. Current 1 hour candle closes not have a bottom wick. Still does not have a bottom wick, yeah. We got about 48 minutes for a candle there to close too. I took that buy and I felt like you took it to join, or you joined the stream. Nice one, Flap. Yeah, I mean, but that was the idea. You know, that was the idea here, that price could break above resistance and then keep moving up on the 5 minute. That's why we had these zones. Because there was nothing else in here. This was just all consolidation or range. That was a lot of range over there. With the signals you send out, do you post your analysis somewhere else for us to see because it's easier to learn the thought? Yeah, I think go on WOP and then go through the label charts. That's where it's already all detailed, because you know we did so many of those label charts. At some point, it just becomes repetitive. So it will just be saying the same thing over and over and over and over again. But that's why all that information is on the label charts. And then we also do it on the simulations. You know, on the simulations that we have, that's a perfect time to ask questions when we're doing those simulations, because you know then we can get through a lot more of those examples. Then you gotta look at those examples, and then you can also cross-reference with some of the information in the WOP database for the label charts. But yeah, you gotta ask questions. So if you see something that's maybe it's like not clear, you gotta ask a question. Oh, you did see them? Nice one. Yeah, that's the thing about trading. There's only so much we can. I used to do that actually. Every day I used to do like a recap of the trades and then post it in the WOP label chart section. But it got to a point where it was like so repetitive. So I think the main thing is just understanding first the concept. Like if you get the concept, you're gonna see it's like every day we're just doing the same thing. And then that just needs to stick, because the edge comes in different market environments. You know, that's when the experience really kicks in. It's like, okay, so what makes you think today you can have a really good trade? You might see some situation like this where price is moving downwards, with so much volume, and then you have this little consolidation here, so it's a bit different. So you're taking the same entry, but it's like in a different market environment, because today you're having price really move down, for example. So that kind of contributes to the edge of having a really good trade. And I would say that would be the only difference. Once you're locking on what the concepts are and how to execute, that's the only difference, is different scenarios. You know, like yesterday, for example, why I hold this trade? Because, you know, we even uploaded a video on this, on why I held this trade to all-time highs. And, you know, it's still the same kind of idea of what I would be expecting price to do, but it's a different environment, because this time we're like pre-NY and the all-time highs, we're just shy of all-time highs. There's a very good probability we are going to see the all-time highs. So that's the only thing that really changes, is just the environment you take the position in. And then don't think of it like in a cookie cutter method, like where, oh, because it looks exactly like this, that it also needs to look exactly like that. Like there can be some small differences. Like it could be still the same consolidation, but you know, like consolidation can have like some subtle differences. You know, you can maybe even have a fake out, or you can have a clean one like this. Yeah, sometimes you get very subtle differences. Sometimes it looks something like this. Still a consolidation, but it's more of like here, it's starting from here, bottoming out from here, and then breaking from here, instead of just the usual textbook one that looks like this, where it's like sideways and then like that. And then I remember I showed you the inverted one. There's that inverted one like this, where it's like inverted head and shoulder style. And then there's also one which can also look like this, but then fake out towards the end before pulling upwards. You see, that's when like a little bit of experience really kicks in, because a lot of the time people are looking just for the cookie cutter one, but you can wait for that one, definitely. But over time, you're gonna see there's like printing in slightly different ways that you can take advantage of. But I think that comes with a bit of experience. So cookie cutter for now, I think can be good as a training wheel. There's a nice little accumulation break here too. Took some time to play out though. So it had a shotgun entry confirmation with like a breakout too. You could put a stop loss somewhere around here, 16 pips, maybe below the support. So it triggered in and then came back down. Respected. You see, that's what I mean. Like sometimes these are fine. Like these trades, sometimes we get these trades. Pushes and then continues to move up. The thing you don't want to see is typically when it hovers. When it hovers and then struggles like this. Those are usually the losing trades. So ideally, you'd want to see like a trigger and then pull back and continuation. Or like just a straight up continuation. Yeah, but I think we'll retrace a bit, but it's going for 3556.93. I would say this was definitely the London open move. Was a buy over here. That was the first clean entry. Now it's kind of like profit taking. So as we hit resistance, so this becomes like profit taking and small little retracements. This could be one of those accumulations that I drew. Boom, 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 where it like fakes out towards the end and then continues to move up. Alright, brother, a goat form. What do you think buyers will break this level? Yeah, I think this level you gotta break it above 35.47. That's the next area here. The thing is, we don't know if buyers can break this level. That's why we said like if price move from here you have to execute, here you have to secure something. You see that reaction we typically get is because of profit taking. So you got buyers in the market here, and then they're profit taking up over here. That's creating this also a little retracement, this little push down. Because profit taking, closing buys is like taking a sell. And you got this little reaction. So we don't know. It's like 50-50. This is 50-50 of the break. But there was a higher probability if this candle broke its highs, that there was a higher probability we could get this range filled. Now the probability is changed again. So that's why we say every moment in the market is unique. You see exactly what I mean? Every moment in the market is unique. Because, you know, some people, they just marry an idea. They're going to take a buy over here, and then they're just going to think that it's still the same exact position. Especially on these types of trades, this specific entry model, we don't know if it breaks these highs. So if you're taking off a shotgun entry, then we don't know if it breaks above. So you got to manage your risk. Because this is what we call heavy lifting, you know. The market needs to do heavy lifting at this point. I do that actually, hold night overnights, and today there was sharks in the water. I was on gold buys from yesterday, which had got up 9k, but it reversed, and I closed a trade at 1,200. Damn, from 9k. Yeah, people were surprised today, huh? Because like the price moves so fast during Asia. It moves so fast. You could be in so much profit, and then all of a sudden, all your gains are gone. Man, that looked like some kind of, maybe it was a large mitigation that happened. Like it just needed like liquidity grab a bit before it continues to move up bullish. You see, for the market, this is like, you see, the thing about the market is if it wants to go somewhere, it's going to go somewhere. Like if it wants to sell, it's going to sell. You know, so the way I think about it sometimes is the market has its own brain. Right? It has its own brain, and maybe in its brain, it's thinking it wants to come down here. And if it wants to come down there, it's going to come down there. It's going to come down there. And we just get the opportunity also to be part of these moves. So there's certain ways, you know, that's like a pseudo way of looking at markets. I guess what you call like pseudoscience. Because obviously, if you think about it logically, they needed to have been sellers in the market to make that move happen. You know, unless somehow all these market participants were all like one organism, and it's like we've all created like a brain, and like the brain is moving in unison. You know, that's the only way it can make sense. Because like when you've been trading for a long time, you start to realize the autonomy of markets. Like markets really can have a mind of their own, and it might even move in certain ways that go against the mathematics of how markets should move. And you know, that's why I always say watch The Big Short. The Big Short is a very nice movie. It shows this perspective really nicely. It's about the housing market. When the housing market was meant to crash, but it didn't crash, the markets just kept moving up. It was going against like this guy's mathematics. And at some point he thought the markets were just rigged. It was just one big casino. So I think it's a very good pseudo way of looking at markets. It's very good. It's very good. Because I've seen it time and time again, man. When the market wants to go somewhere, it doesn't matter what market participants are doing. It's just going to go in that direction. So that's kind of like the idea behind some of the trades that I also take. And it was partly the reasoning as to why I held a trade here from here to all-time highs. Because, you know, at some point you just think, man, the market just wants to go there. You know, there's just a higher chance it's just going to be attracted to certain levels like magnets. But the reason we don't talk about these things is because for most novice traders, they're going to read into it too much. And usually it's not safe to always think like that. You have seen Margin Call, also a great movie. Yeah, I've watched Margin Call. Let me see. Yeah, with is this the one with Ben Affleck? got a 7.1. Oh no, it's not. Margin call? I feel like I might have watched it, but I can't remember it. This actor went broke. Unfortunate thing, this guy. I don't know what it was. Maybe it was some lawsuits. There were some lawsuits or something he was involved in. Yeah, Kevin Spacey. Watched it for the first time the other day. Great film. Oh, really? Nice. What are the odds someone mentions that in the chat and then you watched it just the other day? Yeah, he had lawsuits because of some sexual stuff. Hollywood is weird. Hollywood is such a weird place. I can't believe also Terry Crews got sexually assaulted as well. Like this big dude. Man, for me, Terry Crews, the Old Spice guy, man, can't believe it, man. He has his own stories about sexual harassment in Hollywood. I really love Terry Crews, especially in Everybody Hates Chris. Man, this guy is ripped. Can this really be natural? I think this guy is natural. I don't have a feeling that he takes any gear. Because for me, in my mind, Terry Crews has just always been big. You know, his first role was actually he was a bouncer. He was a bouncer for a movie. Like he was working security for a movie, and the directors were like, "Hey, you want to be in this movie?" And then he was like, "Hell yeah, I want to be in this movie." So he had this movie with Denzel Washington. What movie was this called again? There's a problem with my brain. When I'm put on the spot, I can't think. And the harder I think about it, the more I'm forgetting it. But it's called Training Day. Training Day. So Terry Crews has a role here as big guy. Because literally that's all he was, right? He was just a bouncer. He was like a security guy. And then they put him in the movie. And ever since he was in this movie with Denzel Washington, A-list celebrity, man, like a lot of more doors started opening for him. And man, look at this. This happened to him so far in his trading career, man. I think he was like in his... Why would you guys reckon how old he was here? He was definitely old. He was definitely more mature at this point. So you see, like for some people, it does take longer. Even for Denzel Washington, it did take... You know, he still had pretty good roles like when he was younger, but it did take him a while to really get to this level. And also Terry Crews was a bit older too. Man, a lot of these people's journeys, it makes it always look like it happened overnight. And it happened so quickly, but that's never the case. It's just the same way as a lot of these traders. Some of these traders, it seems like it happens so quickly and overnight. But man, some people have been trading since like 10 years even. Trading Day, no way that's natural. This funny guy is so big. You know what he used to do for money back in the days was he used to do like paintings. He used to paint professional athletes like NHL players. So he used to give them like portraits of themselves. This is actually a pretty good artist. Yeah, White Chicks. He was hilarious in White Chicks. What an OG movie. White Chicks. Remember Malibu's Most Wanted as well? Those are really awesome movies. Blast from the past. How did you calculate that? What's this? What is 3546? 3546? Oh, this No, this was just a random line over here that we put. But the resistance is actually at a 35.45. That was the mark that price was to head towards. You see, and that was a move. That was a move, such a small move. From here to up over here. Then it's like entries, exits. In and out. If you had nerves to let these kind of trades run, it would be around 20k euros of profit this morning. I placed a sell around 35.60 yesterday. It went up to all-time highs. And I was in losses around 5k. After I turned, I just secured 600 euros. But if you had nerves to let these kind of trades run, it would be 20k. Oh yeah, man. Imagine that. Imagine that. That just needs to happen to you so many times that it kind of like imprints on your brain that the market can keep moving longer than you think it can. Because most of the time it does, right? Most of the time I think it does. It moves a little bit more than we think it can. But now we're back to chopping up. You see what I mean? Like 90% of the time is consolidation. So you had 90% consolidation here, then a small little 10% move. Then you had another 90% consolidation, then another 10% move. And now it's back to again consolidating. This is the problem with overtrading, because most of the time you're going to be caught in the consolidation. So you end up giving more money. If you're patient, you get the easy trades, you know, the little 10% moves when you're actually expecting volume. So that's the idea. The idea is like every session should at least have some kind of like, at least one sort of like clean move. It's not always the case because sometimes you get like a fake out situation. But the idea is you can get at least one clean move. So for me, my clean move for pre-London was sells. That was my clean move. And then this is what it was. So that's where I got the sells. I first tried it, failed. Second try, got it. So that was the one clean move. Then we had like a swift reversal again towards the upside. And then this was the next clean move. Shortly before London opened. They got one push here with the London open. Now back to ranging. And you know, it's ranging in such a key area because like you're basically below support. So you need price to re-break 35.47. 35.47, and then maybe, you know, price can move up. And price can continue moving up. AAD. I don't know why I did get the notifications of the stream. Or why you did or why you didn't. YouTube is sometimes like that, I think. When it comes to notifications, it's not always accurate. I also got notifications here on the Discord. See, when you go live, you get notification over here. Well, you should. Sometimes that might be delayed. But you know, we're always on the charts by 3 a.m. Eastern anyway. So that's the London open. Yeah, I think price can start moving up soon. Like to continue going towards daily flip and then maybe continue moving bullish for the rest of the day. We're just up right now, down 0.40%. So like slowly giving back the gains from the day. But it's definitely got a lot of heavy lifting here at this point. A lot more heavy lifting. Oh, you know, on the Discord, you can... Is this Discord? Your final TP is ATH? Damn, sir. ATH, let's go. It's about 358 pips away from where we are now. This looks like a 4-hour fake out too. Notice the way 4-hour candlestick just closed right below support, and then you get the swift reversal. 4-hour fakey to continue moving bullish. That looks like a Fibonacci retracement into the golden zone. You draw it from here to here. It's most likely going to be golden zone. No retracements. Awesome. Man, what a beauty gold has been. What a beauty gold has been since these distributions. And yet, fighting so much to catch them. Like literally fighting to catch these buys. They're not as straightforward as they seem. Not in the intraday time frames. Can be very difficult. If you're not trading that specific time that the market moves. Because you know, the market doesn't move based off of your strategy. It moves based off of the time that it's meant to be moving. You know, so if it's not moving pre-London or pre-New York, there's no good setup, no A+++ setup that can make it a running trade. If it's only moving during Asia and New York session, that's it. That's when it's going to be moving. If you study every week of the market, you will notice that timing play, though. Yeah, it plays the most important part. That's 100% I agree. Timing plays a huge role. A huge role. Because the market moves based off of time. It doesn't move based off because you got a wedgie over there. You got these wedgie patterns. It doesn't move based off of that. You know, if it's on the wrong time, then it's gonna be like, you know, short-lived. So you might not get, especially if you're trying to catch running trades, you might not get your running trades. So you really gotta look at your instrument and see, does it actually move during this time? And if it does move, how many pips can I realistically get from it? I think, you know, people have a hard time understanding this because when you first start trading, you maybe have really big stop losses, and for you it's like it can become a bit hard to understand that because your trades take long to play out. So for you it doesn't even matter. It's just like you're just waiting. So I'm trying to resonate with some other people's styles of understanding markets too. And if you have big stops like this, then yeah, you're just in positions for a long time. So for you it doesn't necessarily matter. For you, maybe this is just an A+ setup until it fails. You know, but if you're trying to catch like more precise movements in the market, then you really have to understand when the pushes are happening. What is today? Oh, Thursday. Man, and we got ADP. Can we move up with ADP? ADP with the New York session. Maybe we can start pricing in something there. But ADP is looking like it should be bearish on the... It should be bullish on the dollar. But ADP, you know, like ADP doesn't typically move the markets too much. It's an NFP you're really looking out for. But it's always like a bit weird because if you got fundamentals during the New York session and price starts to range, it's ranging because it has news later. So we might even find ourselves not breaking above 35.47 until NY. But right now it is consolidating. It's trying to gather up some orders over here. It's like taking a little break, a little pause over here for the market to try and attempt to move in a certain direction. So that's the whole idea behind accumulation. So it can try and move. Then you see it moves up, then it hits its head. It's like it jumps and then it hits its head. Boom. Then it's like, oh, damn, what was that? Now it's gonna come here. It's gonna come here. It's gonna consolidate. And then it's gonna try and push up against that. See if it can get through it. When you have really good understanding, you don't really need big SL for big A. Exactly. You don't. You got a good understanding, you're gonna refine your strategy so nicely that every move is just like almost calculated. Like you're already expecting each candle to behave in a certain way. But if you don't, then that's when it gets difficult. You got big stop losses. It might become difficult to read price accurately because every moment in the market's unique. You know, because if we think from a lower time frame perspective and how variables shift so quickly, you know, what's to say that this bigger position is not getting affected by the smaller changes in price action on the LTF? You know, these changes also affect how the overall trade is going to perform. But when you have like a very big stop loss like this and you can't read into that detail, it's just for you easier to set and forget, you know, because every moment in the market's unique. It's unique here, it's unique here, it's unique here. So it's easier to just set and forget. Set and forget it. Otherwise, you gotta pull your hairs out trying to calculate each variable in such a large space. It's easier to calculate variables in a smaller contained area than it is to read variables in such a large space like this. Looks pretty consistent for the last week. So let's see if Goldie has it in it. If we can continue to move above 35.47, this becomes the next no trade zone. No trade zone. No trade zone, no trade zone. Is this fake? Yes, that's fake. This is fake. This is not real. So you gotta watch out for these fake accounts here on Discord, you know? What is fake? Discord. On Discord, there's a lot of these like channels. Like, you know, they have like my name on it. Let's start off with some stupid things like this. Hello, I'm just a friendly bear here, just stopping by to say hi. How's your trade? The next question which comes out of this is gonna be next is how's your trading? And then he unloads the dog shit on you. So you know you must not follow, or I never message people on Discord. I never message anybody first. Now look at this. This is so sketchy. So sketchy here. Problem with being greedy. Look at how accurate the market is. Why do you think it came right here? Why right here before price moved up? Right on the entry confirmation candle. Came back down to retest this area and then to move up. Because some people still hold, you know? They still hold these trades. So that's what I mean. It's those types of things where I always look at the market having its own brain. Because this is so consistent, you know? It happens so consistently every single day. That it has these repetitive patterns that surely it cannot be random. I used to think the markets were random, but no longer. It's just way too predictable sometimes. That doesn't mean that it's easy to trade either. It's still difficult. Trading definitely is still the hardest way to make easy money. It's so hard because emotions play such an important role. You know, your emotional response to things. And then the outcome of those choices that you make and how you react to them. It's so important because like sometimes you gotta pick times where you can be a bit more aggressive. Like for me personally, I like to take one trade per session. But if I lose a trade and I really see another opportunity, you have to make some kind of executive decision that you're gonna take that next trade. You know, and it all comes from first regulating your emotions to the worst case scenario that you can accept it first before doing something like some kind of overtrade. So I think that's what makes trading really difficult, is just like getting a good making the right decisions, trying to make the right decision every single day. If it's necessary to overtrade or to accept a loss or to manage risk, you know, it can get really emotional. So for most beginner traders or trying to find consistency and profitability, that's why it's super important to limit the amount of trades you take in a day. And say at some point, this is a cutoff. Like if I have one losing day, then that's a cutoff. That's a cutoff because I know I'm quite emotional. So let me not even take the next position because I'm going to be reacting based off of the emotion. So that's why we call the edge. You know, everybody has a different edge. Everybody has a different risk tolerance. Saw a guy using your voice as a background sound on TikTok trading. He just puts his trading picture and your voice on his live. Yeah, I've seen that too. I wish she puts my voice in that little clip as well. And then doesn't pay attention to it. So if you're listening to this voice and you're on TikTok right now, this guy here has stolen this video. He has stolen this video, and this is what he's doing to trick you. I am not really doing trading on TikTok. Public service announcement for all TikTok users. Public service announcement. All TikTok users. Yeah, I hope he puts that in. Because you know the thing with scammers, man, they're so lazy. They're so lazy. They don't actually take the time and effort to go through their things like that. Price is coming down. Small little break over here. This is like accumulation break. Now it's like trying to distribute a bit to the downside. Now you see, that's what I meant. Like this is a strong resistance by 35.45. Breaking something like this, you really have to be in line with the time. Like right now, it's just not the right time. This is 4:47 a.m. Eastern. Like it's not a time when such a move like this you typically, you know, the thing is it could still break, but this is not a time you would typically expect. There's a lower probability that it would break those highs by 35.47. Higher probability closer we get to NY. But today we have news. You don't have TikTok? I have TikTok, but I don't trade live stream on TikTok. You know, we were live streaming on TikTok. We had such a nice community over there. It was so nice. And then TikTok doesn't allow people to live stream apparently. Am I being patient? My first trade was a loss this morning, second a win. Finish with a small positive and not rushing. I think that's perfect. 2 trades a day, like, you know, is also pretty nice. It's pretty good. I think the third trade of the day usually comes if, let's say your first 2 trades were really nice. That's when ideally you would want to be taking your third trade of the day. Maybe your first 2 trades are really good. But if you have one good trade and then maybe one not so good trade, then usually you just want to end of the day, because it can get really frustrating on the third or fourth trade, depending on how your day is going. Actually, on the days that I'm losing and I'm taking my third trade, oh, man, it's too much. It's too much stress. It's too much stress. Even yesterday's with the fourth trade, that was also like a bit stressful. Even though my risk was already managed for the day, just the fact that it's a fourth trade, it's so stressful. Because, you know, like, you should have already been up properly for the day by the time you're taking your fourth trade. But I've been noticing it's kind of like a game of cat and mouse with the market of late. I've been having winning trade, then losing trade, or losing trade, then winning trade. Then I have to take the third trade to try and end the day with a little bit more gains. It's been a crazy month so far. But it's been a good month, you know. So far everything's going pretty nice, but it's just been difficult. You know, just cause it's going nice, that's fine. But just in terms of execution, it's been definitely difficult. I really thought this month I was actually gonna get my fourth loss. I haven't had a full losing streak like in ever. But man, this month I really thought this last trade we took here would be a losing trade. But unfortunately, you know, it was a pretty nice W trade. So it kind of made back for the previous 3 trades that I took. I missed the entry and I FOMO in the first one, but second one I was ready. People really go along. Yep. Oh, nice. Trump and China's Xi. Please give my warmest regards to Vladimir Putin and Kim Jong-un as you conspire against the United States of America. Wait, really? Did he really say this? Trump said to Chinese president, please give my warmest regards to Putin and Kim Jong-un as you conspire against the United States of America. Wow, that's crazy. That's crazy. But hey, you know, why doesn't America invest in third world countries? Yeah, it's not China's fault they're taking over now. At least China they invest everywhere, you know. You gotta go to like Italy, you'll see Chinese. You gotta go African countries, you'll see Chinese. Americans don't do that. They don't invest in these other countries. So of course the Chinese have seen a way. You know, Chinese are so integral of so many cultures around the world. So integral. They're all over the place. You know, they got the Silk Road from East Africa all the way up to Italy. Like, they're taking over 100%. Why not? Why not? America could have done the same exact thing. Yeah, definitely conspiring. 100%. China, Russia. There's a higher probability that those guys are gonna be liaising with each other. Oh, damn it. I did this thing again. Lost all my windows. Alright, nice. Back into the gulag we go. Oh, the last city I lived here was the start of Silk Road. What is gulag? Gulag is just an area of like fighting grounds. These are like the fighting grounds. I like to think of like Gulag. Yeah, exactly. Prison in Russia. Like if you also play Call of Duty, when you die, then you get sent to the Gulag, and then you gotta fight your way out. So this is the Gulag here. You know, like Price already tried to fight its way out, and then, you know, it had a little bit of gameplay, and now back in the Gulag. Dumpit. I reckon what it is, it's not gonna be directional because of the news that we have, the ADP and unemployment claims. So it would be actually surprised to see this thing go really anywhere of significance. UK just catches little small trades in between the ranges, but I think that'll be about it. Because as price is coming down now, you know, you have to consider it has structure on the left hand side. We're coming down towards now support areas. Nothing here looks too interesting. The next clean range is all the way down over here at this current moment. Unless price first comes down and then create some structure for it to move back up to create the range again that it can correct like we had previously over here. So it would first need to come down though. Right now what's currently in effect is a little bit of a distribution from this zone right over here. So if you take a sell, stop loss just anywhere above here. That's currently what's playing out. Nice little fakie above here too. That looks pretty clean. A little bit of a fakie above there. Boom, boom. Creates even like a small little head and shoulders pattern in this. For a sell towards the downside. You see, the thing is like when you're trading the 1 minute, you're not even considering anything else here. So you're mainly just looking at the structure. You're mainly just looking at distribution. That's the key thing with these types of entries. But 100%, like if you have a lot more cleaner range there on the HTF, then it's much nicer for your trade. But it's not typically necessary. But if you can have it like what we did right over here, you see on these little breakouts, if you can have that and then still have that clean range, it's much nicer for your position. Look at how beautifully that went up. On the 1 minute there's a 1 minute break in line with a 5 minute confirmation. Looks really good. Because the higher time frames can still have small reactions, you know, because it's looking left and it's thinking, oh man, like should we just reject this zone? There's not that much room to move, and it starts to get maybe a little bit, there's a higher probability it starts to get a bit more choppy like that than opposed if we just had clean candles. This week I think we'll make new ATH and then next week sell off into sideways market for another few months. Price getting ready for end of the year. Yeah, end of the year. End of the year. This is it. This is it. End of the year here. The last quarter of the year. This is when everybody's looking at the portfolios and saying, you know, it's been a great year. It's been a great, a great year. And now it's like time to keep the profits that you've made. More so in just general market perspective. But at the same time, there's a lot of opportunity to also maximize gains. You know, end of the year with these rate cuts. At the same time, there's going to be time to maximize gains. You know, in all areas in life, people are going to go hard here towards the end of the year. This is like the final stretch. So you don't want to give back anything. Best case scenario, you just want to make more. But I don't think we're going to sell off. You say you're going to sell off into a sideways market for another few months. Price getting ready for end of the year profit taking. Yeah, but I also don't think we're going to sell off for another few months because the rate cuts should actually keep pushing price up all the way until the end of the year. That's what we're expecting. Till the end of the year, that price can just keep moving directionally. Because we're still anticipating at least 2 rate cuts on the dollar. And then consolidation maybe comes in next year. I don't think we're going to consolidate. Like, we've already broken out of the consolidation here. We've been consolidating for such a long time. Since like April 21st. Yeah, finally starting to break out. So I don't think we're going to consolidate. That's why there's a lot of pricing in, a lot of anticipation for this next FOMC. Should be in 13 days. Yeah, I got 13 days. Let's see, probabilities are still at 80. Oh, 97.5%. Man, look at that. It's gone up here. 97.5%. Yeah, people are not sleeping, man. Markets are not about to consolidate, sir. 97.5% probability of easing. Yeah, this is it. This is it. People are already in these positions from such a long time ago. When you're thinking about smart money concepts, that's what smart money concepts is. It's anticipating direction of price via macro fundamentals. I don't know, but what I do know is this year went hella quick for you. Yeah, it's been a quick year. But so much learning this year. Man, look, that's smart money concepts. They get in early because they move the markets, correct? Like they move markets, so they have to get in earlier. But they get in earlier based off the macro fundamentals. So you see this, the Kickstarter was Powell's speech here on Friday, 22nd August. That's when the kickstart was. That's when smart money was like, okay, all right, Mr. Powell, I see what you're saying. So let's get in now already. There's no point waiting. Because the longer they wait, and they're the market makers, they gotta get in expensive prices. So they've already been in their trades. And then anything extra will just be like, you know, at this point it's just like extra. But they've already made some pretty nice gains. Like since Powell spoke, price has moved up at least 6%. You know, since Powell was speaking that day, price has moved up at least like 6%. At least 6%. It doesn't mean they made 6%. You know, because risk management discretionary. They don't need to risk even 1% to make these moves. Because they're moving so much money and there's so much money in rotation. But just generally speaking, it's moved like at least 6%. Since Powell spoke. It doesn't seem like we're getting too many fundamentals on the day though. See, gold dipped around 35.40 an ounce on Thursday, pausing its longest winning streak since March by remaining near record highs, powered by increased safe haven demand and expectations of US monetary easing. On Wednesday, Trump administration appealed a court ruling that struck down most of his global tariffs, setting up a potential Supreme Court showdown. This added broader uncertainties, including concerns over Federal Reserve independence and debt worries. July data showed a larger than expected drop in US jobs openings, signaling a softer labor market and reinforcing bets on a potential September rate cut. Yeah, that's probably why the probabilities went up from 80 to 97 again. Investors are now awaiting US jobs claims and ADP data and Friday non-farm payroll report for further clues on economic momentum and Fed policy. Gold has gained roughly 40% year to date, with analysts expecting the rally to persist.
Why are you running? Why are you running? Spartans!
End of the year.
What is your profession?
Let the rally persist. Goldie. There's short-term sells over here. It's maybe some profit taking. I still want to be on buys. You know, most of my positions, I still definitely have a buy bias. But sometimes you just got to take what the market gives you. Because a win is a win at the end of the day. But if you can get stuck into these buys, you kind of get these bomber cloud chances. But you know, like another way of doing it, if you want to overcomplicate now, you can go on your bookmap. You can go on COT data if you want. But that doesn't make any difference to where the market is going. It wouldn't make any difference to where we're expecting rate cuts, how Powell is coming on, how jobs data is coming on. That's the problem with getting too nitty-gritty with smart money concepts. Because you think you're doing something. In reality, you're not doing anything. You're just doing way too much analysis, sounding way too much smart, too smart for your own good. You know, sometimes you can be too smart for your own good. You gotta try and outsmart the market. You know, you gotta try and think like the retail traders. You're like, oh, you know how funny it is when I see retail traders talk about retail traders? It's the funniest thing ever. When a retail trader is talking to you about what retail traders are doing. That just does not make any sense. Imagine a guy sitting in his house, no institutional experience, teaching you about what institutions are going to be thinking, like as if they are the institution. You know, we can anticipate, but the moment you fall into that gulag, it's gonna be your trading gets really complicated the moment you fall into that gulag. Because like for me, I just focus on what the main news is about. I don't go out there looking for signs of COT and all of this stuff. You're gonna see this is mainstream news. Most of the time, it's the mainstream news that is moving the markets. That's why even if you go through the fundamentals, you're gonna see a lot of the keywords which are very repetitive. You know, very repetitive keywords all the time. This is like more than enough to anticipate, because like the whole world is looking at this. These are like the major events. You know, those are what's governing the flow of price. You know, it's not about outsmarting the market. When Donald Trump tweets something, are you gonna outsmart the market? Maybe he's gonna say something bullish about something. Are you gonna try to outsmart him? No, he's gonna move the market. He tweets something bullish, market's gonna go up. You know, so like that's when you fall out of place. Is like when you're trying to do the opposite, when you're trying to like outsmart everybody else. Man, like every time I try and outsmart the market, I always lose. Even on just the smaller time frames, when I try and outsmart the market, I always lose. So I think for right now, it's like the main things you want to be focusing on are just like, and it's usually the main thing you want to be focusing on anyways, is interest rate decisions. Those are so much easier to like understand where price is gonna go, you know, overall like this. It's so much easier because it's in line. It's like you're getting the fundamentals. This is literally happening in real time and you're seeing the candlesticks printing in a certain way. But all that other stuff, it's not really happening in real time, and there's not much weight. There's not much weight to it. There's just a lot of speculation. So you can imagine most of the world would be risk off. But smart money works brilliantly when there's like a general consensus about things, a general sentiment about things. And that's when you really see that volume, because when it comes to smart money, what it is you're actually speaking about is volume. Right? So the more you have a general consensus on these important matters, you're going to have a better chance of anticipating where the volume is heading. And then majority of the time, just like the markets, it's like consolidating. Like literally they're not moving. Like majority of the time is just consolidating, waiting for these really high probability times. High probability times, and you know, like hedge funds have their own ways of navigating those situations when markets consolidate. They're obviously like buying and selling, and they have a diversity of portfolio. And then the stock market, commodities, that's smart money. Like they have so much information about certain things that they're able to spread themselves out. They're able to have a large portfolio of things. But a retail trader, you just don't have the capacity. You can't have the capacity to have such a large watch list and understand how commodities work, how maybe even weather patterns can affect certain things, or how many wars in other countries can have domino effects to affect other things in other nations and that sort of thing. That's kind of like who you're competing against, and you're like fighting an uphill battle, because you as a single individual, you wouldn't have the capacity to play at that level. Because those companies themselves, the institutions, they're made up of so many people, so it's like working together towards a certain goal. So that's why for me, man, when you start digging into like all these smart money concepts and you're trying to do it yourself, you're not going to be able to do it. Closest thing you can get to is like understanding where the majority sentiment is going. And man, let me tell you something, that's enough for you to have an amazing year. Because if you were locked in when Powell was speaking on Friday and you were looking forward to these rate cuts, like which was already something we've been looking forward to literally since the beginning of the year, You'd just be waiting for your moment to strike like this and already be in a situation where you can maximize gains. And that's still what we're riding, you know, that's still the momentum we're riding from that Friday event. It's still the same momentum I'm even planning on riding today. So hopefully later on today I can get myself a buy. And every day you're just trying to get small chunks of the cake, small pieces of the cake. And it gives you an edge on your performance, because you see, now I'm comfortable holding buys. Yesterday I made like 3%, almost 4% actually, because now I'm comfortable holding the buys because I see where we're coming from and I understand there's still volume in the market, so I can hold those buys. And at the same time, if I counter trend, you know, just because there's the amount of volume in the market, like if you look at price action today, look at the way price action has been flowing. Look at how big these moves are. These are massive moves. So even if I get a counter trend trade, there's still a pretty good chance that I can get really nice profits from them. You know, but you don't have to be right. You don't have to be right and think like you've missed the move since you didn't get in all the way over here. You're still riding the wave. The wave is still in motion right now, and it's going to keep going like this up until December. You know, so that's how I use smart money concepts to my advantage. I don't need to be right. I just need to know if there's volume in the market, and that's going to change the environment of how my trades are going to play out. Like, man, today my trade went, I think it was 4%. I think my trade went all the way to 4%. But since there's so much volume, I couldn't close at 4%, and okay, it started coming down again. I saw like two, it was around 1,700, and then I thought it could keep pushing 1,600. Then it came down to like 1,500. Then I just secured the trade. Still respecting shotgun entry on the 15 and 30. This looks like a small little liquidity situation down there. Because it's funny, I saw it on Bloomberg Business that the probabilities went up to like 90%, but that didn't update yet on the Fed Watch tool. But now it's updated again, 97.5. Damn, that's almost 100%. Yesterday night, before I entered the trade, the market kept going up, and after I put my trade in the market, it'd be like going down. Like, hell, what the F? Market maker watching you. Yes, they also have 200k news terminals, which you can't compete with. Yeah, you can't compete with it. They don't. The thing is, most retail traders who are mainly considering like the trade smart money concepts, they don't even have the entry level tools. They don't even have the entry level tools to even start. The problem is lack of education. So most people will see like a volume profile or something like that, and they'll think automatically that it's something a bit sophisticated, but that's like the most basic thing ever. Like a real smart money, if someone ever teaching you like real smart money concepts, man, this guy needs to be showing you like data. Like, yo, this guy has to have like really good research skills, looking at a bunch of things. I'm sure they wouldn't just be looking at one instrument like gold or something. They'll be looking at a lot of things. They'll be looking at quarterly earnings, taking you through documents, taking you through correlations, and making that make sense with broader economic policies and all that stuff. And that's why people who actually trade smart money concepts have economics degrees. Like, these are just not people you get off the street. These are people who genuinely understand a lot of these economic jargon, and they have degrees, masters, PhD, what have you. Like, it's not a joke. Like, smart money is not a joke. It's not ICT teaching you an inverted unicorn. That's not what smart money is. There's so much due diligence that you're gonna hate trading. Man, some people here can't even stand the fact of even not taking a trade a day. You'll find yourself doing more work than actual trades. You're gonna be doing research, my friend. You're gonna have a lot more research than actual positions. Do you use the rising wedge? No, sir. Thank you for the sub, Moon Trader. Yeah, that's one thing that really grinds my gears. That's one thing that really grinds my gears. I could talk about that all day. And how funny it is. Like we would not even be looking at chart right now. We'd have to look at more. You know, it's like finding that data as well. I've never had a mentor who's taught me how to find that data. I've tried finding it myself, but man, one time I tried smart money concepts and I opened a quarterly earnings report, and that shit just took me back to school. Like there was like so many pages. I was like, bro, I'm not doing this. I'm not doing this. Like, and then it's such a skill that you really truly have to have some kind of guidance and some sort of economics background once you start really digging into the information. But you know, the beautiful thing is, like, you don't need to know everything. You can just know the key things if you truly understand the FOMC events and how jobs data affects markets and how interest rates, you know, how people really anticipate interest rates. That's really powerful already in its own, because if I can explain to you the reason why gold has been in this range, for example, the whole time was mainly due to interest rates. And it had nothing to do with the geopolitical tensions between Russia and Ukraine, because I remember that was escalating here. This was on 22nd of July. We had escalations with Russia, Ukraine, but price kept moving down, and we were wondering, why is price moving down? Like, price should have been moving up, and we just kept moving down. So a lot of this waiting over here, this has been mainly geared towards just one event, which has been the interest rates. So they're definitely one of the most important things to consider, because that does affect the overall market. Gonna call it today. Have some work to do. Still had a good trade today, so check you out tomorrow. All right, see you later, Jonathan. Too much work to just take a trade. Imagine doing all that work and then still losing the trade. Because, you know, you could have all that work, but also taking the position is another thing. That's also going to be another skill set to align your entry, your price points, and getting the right stop losses and everything. That's why Warren Buffett is a GOAT. He can do both. He can take positions and he can do the due diligence. Because, you know, when he decided to exit the market, remember when the stock market was about to crash? That was anticipation for Trump's volatility, because Trump as president carries with him a lot of volatility, a lot of policy changes. So it's also about reading the situation, reading the room. So Warren Buffett was one of the only investors who got like perfect exits this year before the stock market crashed. And then as it's crashing, I'm pretty sure it got back in again because it created really good opportunities on the dip. So that's kind of like that competitive level is so hard. Like, you have to be so experienced and you have to have the right character development for such a task. You can't just be a lazy guru on YouTube talking about a volume profile. You know, it doesn't work like that. But that's a reason why we focus on short-term moves as well. Because it's much easier to anticipate short-term moves. When you look at higher time frames, you have to consider a lot more. Yeah, man, that would be such a heartbreak, and emotionally you feel like shit and then nothing works. Yeah, just watch The Big Short. Like, I think The Big Short is a perfect example of that. Again, it's like that way that guy did so much research before he took his position and he was still in drawdown. Every day he would be writing on the whiteboard, minus this much, minus this much, minus this much, and wondering why all the information he did, why it's not working out for him. And it's like once you do it, you're kind of like expecting to go heavy in it. Another cool case of this was the guy for GME, Hello Kitty, how he anticipated GameStop skyrocketing up. That was a really good one. That was a really nice, from a retail trader, that was a really nice, what's his name? Hello Kitty? Keep forgetting his name. Roaring Kitty. I think it's Roaring Kitty. Man, he nailed it. Roaring Kitty did that. What people are trying to do right now is, you know, there's a problem with data supply. I think these data centers, NVIDIA is struggling with supply with data centers. So a lot of people are reading into this as a potential short opportunity on NVIDIA. The lack of data centers. And NVIDIA is still short of $200. I think it might hit $200 and then we so close to $200. And then maybe we can start to see some retracements. You're down for the week? Wow, things didn't go according to plan. Oh, one more day here, sir. What are you talking about? You only trade gold from the beginning of your career, and why choose gold? No, I used to trade GJ a lot, but GJ was so difficult to trade. Now gold is the only thing which I see moves, and it just makes so much sense, you know? Like the way gold moves, it's in line with the way I look at markets. So that's why I just focus now on gold, because it has volume and it respects price action. Those two things. Because you want to have an instrument which also respects price action, that it's not faking out too much, it's not giving too many liquidity grabs. So I think like gold and the way I trade is a pretty nice mix like that, because sometimes even gold scares me but still goes in my direction. Like you could still show that it's going against me but still have just enough, it has just enough volatility not to be super random. Because sometimes when moves start to go against you and you might have a tighter stop loss, you could easily find yourself getting wicked out of the trades before it goes in your direction. So gold definitely respects a bit more. And I heard somewhere that gold spot is the least manipulated one, because it's not like currencies. Currencies are easily manipulated because these are like countries, governments and banks, you know, like Japanese yen, British pound, Australian dollar, US dollar. But gold is less manipulated. Okay, buy now. Let's see 5 pips a sell. Oh, on buy now. You're on a buy now, 5 pip a sell. Yeah, this thing's ranging. It's like got a small little accumulation situation here. Yeah, like you said, you only need a small piece of the pie. That's true, man. I wish there was somebody who could actually teach smart money concepts. Like actually teach it. That would be interesting. Like take me through the terminal. You know, I think anyone can get a Bloomberg terminal of sorts, or like some kind of professional grade analysis tools that most people don't use. And then take you through documents, take you through data, take you through a bunch of things. Like, let's see. Yeah, like give you a really nice... Where are these options on TradingView? Here. Like a really nice presentation, you know? Like they'll take you through this and they'll show you like how this country's politics and how, you know, it's going against this country. You see United States here. Then we got China over here, and like give you like a really nice rundown. You know, like a professional, serious rundown, not just looking at a dumb chart like this and then put a volume indicator or something. But it's super hard. Like, you're not gonna find that because most people who are at that level, they're already employed somewhere. So they definitely would never even be like, there's a lower probability there would be content creator on YouTube. So that's why for me, man, I just realized I gotta stick on my lane. I gotta stick. There was one day I remember specifically, I started looking into that bookmap thing, but then I was so exhausted because this is still in year 1. And going down that rabbit hole made me so exhausted that I decided, you know, this is not going to work for me. I need to make something simple where there's not a lot of moving pieces, because there's more moving pieces, the harder it is for me to take trades daily. And then that's when I started really nailing into these candlesticks and understanding things like time, best times to be trading, candlestick patterns. You know, one of my biggest breakthroughs was understanding these moves. Every time I would see like a big move, I would always ask myself, okay, how could I have caught this move? You know, I would look at it from the 30-minute time frame all the way down to the 1-minute time frame. And then just keep looking at the patterns of what keeps happening every time a big move like this happens, and what keeps happening every time price consolidates. Because I'm just trying to catch a small piece. I don't need to know the higher time frame perspectives all the time. I just want to catch a small piece. You know, the small pieces in the market, they're not influenced by necessarily by the due diligence surrounding the instrument. You know, the overall smart money surrounding the instrument. To catch a small piece, you just need some kind of entry confirmation. That's why I said, like, you know, entry like this from here to here, that's it. That's just a small little move. You know, that's all I wanted to catch. Just small little move like this. And then you start to see, okay, so, you know, there's a certain time when there's clean range on the left-hand side that price also moves a certain way. And you start adding that into, you start compounding those little investigations. And in the end, you start developing your own sort of like technique to finding consistency. If a clock with no numbers falls on the floor, how do you know the time? There you got Woods with the riddles. What is the answer to that? If a clock with no numbers falls on the floor, how do you know the time? Love your job, bro. Keep going. Thank you. Anybody disagree with me? Nobody disagrees with me in the chat. I thought I would get some pushback for that smart money rant that I went on. I thought somebody would say, "No, man, that's not true." Looking back on the candles in the last few hours, can you see? I thought someone would say, "Oh no, but this guy teaches it, or that guy teaches it." Can you see have a pattern forming to the upside right now? I know only one guy who was kind of teaching. It was Anton Krill. He went to university, and some university in the UK, and he taught a bit of it. But you see, also he had experience because he was working at Goldman Sachs. So you see, this is what I mean. This is how it would be like. It would give you like a rundown like this. They wouldn't show you some dumb volume profiles. Like, and all these are economy students. All economy students. So you're digging more into the actual jargon. Look at this. No single volume indicator. None of that. A lot of it is just a lot of due diligence. A lot of patience. But you see, it's like most retail traders wouldn't have the mindset for this though. Because a lot of people, they wouldn't be inclined to ask questions like, buy now, sir, or sell now, sir, or should we buy now? Should we sell now? You see that there's a way you want things to be, and then there's a way that life actually is. So it's really important to audit your thinking and see what kind of mentality you have. You know, if you're that type of person to come into a stream and then just say, so we buying now, we selling now. And at the same time, you want to learn these really complex things about trading. You see, it doesn't fit. The puzzle doesn't fit. That's not your character. So we have to be really honest with ourselves when we want to take on certain challenges. I'm not saying any of this to be mean. I'm just being honest. Because what I would hate is for somebody here to spend the next 5-10 years wasting their time. I want you guys to be profitable as soon as possible. Like give yourself like 6 months. At least 6 months to understand these concepts properly, and then just work on the psychology and your edge a bit more. Which usually, I would say, revolves around timing, understanding the time that you're trading, understanding how interest rate works. This is why I use. Always keep in mind FOMC. Understanding your strategy, the entry models. Not the cookie cutter one, but how it can look in different environments. Yeah, a lot of patience. You really got to work on patience. Making sure you don't tilt, making sure you don't take gambling trades. That's like your discipline. You're working on your discipline as well. And just keeping up with general news, like the geopolitical tensions is a quite important one as well. But that one is not currently having too much of an effect on the market. Geopolitical tensions. And I would say like trying to consolidate everything that I do in like a very simple way. I'm just being consistent, Be consistent. Don't let bad days put you down. Just keep executing. Keep journaling your trades. Because every time you take a trade, it's super fresh. So you have to journal it when it's still fresh. And just work on those demons, FOMO demon, greed demon, afraid to hold, trade demon. Like then just slowly but surely, you're going to get better every single day. Yeah, I wish people stop asking for that. Okay, yeah. Should I buy or sell? Oh, best idea. Hey, that's smart one. Best idea I've had is to wait for sunset, so the rough time and put it back up. Let me ask ChatGPT if a clock with no numbers falls on the floor. Let's see what ChatGPT says. Thinking. Thought for sevens. Time to get a new clock. Time to get a new clock. Thought for sevens. I like Woods' answer better. Let me see. No, that was a joke. The riddle answer is you read the hands. The positions of the hour and minute hands tell the time even without the numbers. Oh, that's a mic drop right there. Man, AI is going to take over. Yeah, so there's your answer, Woods. If a clock with no numbers falls on the floor, how do you know the time? The position of the hour and minutes hands tell the time, even without numbers. That's the thing about riddles. The market is like a riddle. It's like the answer is always there in plain sight, but you can't see it. And the more you overthink it, the more dumb you feel when you realize that the answer was so simple this whole time. Answer was so simple. All you had to do was wait. Okay, see this trade zone over here? This is, you know, the market's not going to move. It's not going to move now until like the next 25 minutes. That's when volume starts kicking back into the market again. So you see, sometimes the answer to the riddle is to not do anything in the market, because sometimes you can take a losing trade and you're going to really bang your head on why that was a losing trade, how you could have done something differently. You're going to look at all the possible case scenarios, but the answer would be so simple. It would just have been to wait. You know, maybe you should just not been trading this time. Like for me, that's what the answer to this PA is. It's not to look for entry, it's to wait. This is to wait. This is to wait for the next hourly candle that's going to have a higher probability that we're going to start moving based off of previous data. There's only one clean move that happened here. This was just a London open push up. Like if you generally look at the market for what it is, if you come here in your kill zones, since the London open, market didn't do anything over here. It just consolidated. But this was the only genuine move. This was the only push upwards. And once you had the push upwards, market consolidated again. 90% consolidation, 10%, you get like a move. You can always catch moves in here, like don't get me wrong, but this is the main, that was the main distribution. Because the main distributions are gonna stick out like a sore thumb. You know, that's when what's how people call like impulsive moves. Like those impulsive legs, downside to the upside. Small little impulsive stretches. My EA has been taking a sell position for the last 2 days. It's run on grid strategy account is 47% floating. Drawdown. Any suggestions? Yeah, get rid of it. Get rid of that EA. Learn how to read the candlesticks. EA is the same thing as it can be the same thing as understanding the smart money concepts, because also they have their own EAs. So your EA going up against $1 million+ invested into EA with so much research, which EA do you think is gonna win? If you bought an EA for $1,000, $2,000, nothing beats, for a retail trader, nothing beats pure execution, like learning how to trade for yourself. Showing up, getting that, taking those trades based on your own decision making is the best. Because in EA, it's you wanna like understand it, right? If you're a car guy, would you if you're truly a car guy, would you want to drive an automatic car? Wouldn't you want to understand like how manual cars work, you know, how manual transmission is like, and you know, all these different engines and all this stuff? If you're truly a car guy, a true car guy wants to drive a manual car. He does not want to push a button and then hit reverse and then it goes reverse, and then push a button and then hit drive and then it goes drive. So it's like, what do you want? Do you really want to become a trader? Ask yourself that question. Or are you just looking for shortcuts? Because if you're looking for shortcuts, then, you know, it's like, why even bother? You have to genuinely want to have some sort of interest in markets. Intimate. I think that makes a lot of sense. They're very good for blowing accounts, robots. Because market conditions change, environment changes. You know, a robot can't take some of these decisions that need to be taken. Like, you could teach a robot TFX concepts, but let me tell you, sometimes the way I take my trades, a robot can't think the way I think. You know, some of these trades, they're very specific to my own mind. So you can't program that into a robot. Like a robot yesterday would not have taken the buy that we took to all-time highs. For example, it's going to miss on certain things, and it might end up taking the other positions that maybe you naturally would not have taken. Why I hate volume? Because you can see it in the candles. You don't really need any, because the thing is, like, volume is a lagging indicator, so you normally see it after, like, it can work, but you kind of see the candlesticks move, and it's also, the candles give you a hint of when the volume is coming in. It's much easier to see a consolidation and then anticipate a volume than it is to see candles move like this and just have like a volume thingy over here tell you that there's a lot of buyers down there. That for me is a bit random because, you know, like the market just moves like this anyway. But if you see consolidate, you know there's something happening in there. It's like building. It's building orders before volume distribution. That's the kind of concepts that I focus my attention more on, like more concrete structure. I wonder how many accounts were blown yesterday by EAs taking the opposite trade on buys. Yeah, true. That's what they do. It's they're not able to navigate that properly. Like if something happens, like a 9/11 or something of the sort, for example, like an EA wouldn't necessarily know about these and how to. You'd have to turn them off because they're gonna start doing dumb shit. They're gonna be reading the price action completely inaccurately. You know, for example, Ricardo likes this thing. Sometimes what he likes to do when price comes down, he likes to buy quickly because he expects a reaction. But now imagine 9/11 happens, for example, just as an example, and the US dollar is crashing. The EA will think that it's just coming down, it's oversold, and it's going to try and buy. It's going to try and hit that point. But then it's just going to keep pushing down. It's going to keep pushing down, and you can keep making the same mistake over and over and over again. So sometimes, you know, like, you got to be very careful. You still have to monitor it. Yeah, it's like, how many minutes? 20 minutes till the new hourly candlestick opens. See the hourly? Smaller retracement. So from up here down to here. It's probably like a golden zone. Because it's creating new lower lows. But we're still expecting price to move up bullish. Volume is a leading indicator. Yep, it's a leading indicator if you understand the fundamentals. Like you see how Powell spoke here on the Friday and we're already expecting rate cuts, but that speech that he gave, that was the first time this year that Powell said that they were getting more ready for those cuts. That was the first time Powell actually gave us something of substance. You know, and now we can start talking about volume as a leading indicator like that. Now that's a leading indicator. That's why when the man speaks, we all listen because he's a leading Powell is the only indicator. If you want a volume indicator, then that's going to be Powell. Powell is a leading volume indicator. Everything else, you might see a few reactions every now and then. Like you can literally draw a line anywhere on the chart. You're going to have a reaction. But that does not mean that it's going to prove to be a useful tool for you. The only leading indicator is candlesticks. They're the only leading indicator. You know, if a candle, for example, closes above resistance, it's leading you to the direction of where price is going to be heading to next. If it breaks the previous highs, higher probability moves up. If you got a psychological mark, such as the all-time highs, and you take a buy here, like we took a buy here, then that's going to be the leading indicator. Psychological mark here at all-time highs that behaves like a magnet. And that can be a leading indicator because the high probability that price moves up. Do you trade just gold? Yeah, mainly gold. I don't trade nothing else. Oh, look at this. Another leading indicator over here. Candlestick closed above resistance. Broke the previous highs and your price moved up. Clean range on the left-hand side. Look at that. Price accumulated orders. You see, we had accumulation. And then it was showing you that volume was to distribute. You know, and there's your distribution. There's your leading indicator. Do you still need training wheels? Do you still need a robot with no feelings and no sense, no consciousness, nothing, to just put a line on there for you based off of something that's already been programmed that you also don't fully understand yourself why it's even putting that line to tell you that that's going to be your leading indicator? At least if you knew how it was programmed and you knew like all the data points and then actually understood the price and the candlesticks, then, you know, maybe it makes sense that you can use it. But you don't want to trade something that you don't fully understand. See, for me, this is something that I always see. I always see market consolidate, then distribute. I always see clean range. So it's like, if that's what you're looking for, you know, you're going to start to see this as well. And then you're going to see how powerful that is. See 200 psychological mark? Don't need no indicator to tell me this is a very important level. This is a psychological mark. This psychological mark 200. Every time we come up here, look at this. Price shot down, price shot down, price shot down, price shot down. So you see there's a difference between actually like learning the skill and wanting to take shortcuts. Gold and Pokemon cards. Yeah, I hope you guys don't think I'm mean. It's tough love. Chat went quiet here for a second. It's tough love. And we need pushback. We need pushback. Like if there's something you don't agree on, I would love to get like a response which is also like some kind of like a challenging response to why you believe that volume indicators are leading indicators. You know, that's how we grow, you know, that's how we elevate. We challenge each other, and I think it's really good. You know, come onto Discord over here. You can even post your feedbacks. How can I avoid this situation? 3 BE and USD JPY in London open today. I usually move my SL when the running hit 1-to-1. But the market keeps coming and hitting my BE levels and is now finally moving to the profit target, which I was aiming for. My target is always 1-to-3. This always happens to me and I don't know. Oh, because you're trading in a range. The market is just not going to move. You know, that's where the time comes. The time now becomes important. This is when you can consider maybe it's just the time that you're trading. Because you see, the market had already said it's going to move sideways. So there was nothing that you could do in this situation. Even if put to break even or you let your stop loss be open, look at the overall market condition here. It's not moving anywhere. So I think this question can be answered with gearing time, with putting time into it. There might be a low probability time for you to be having these running trades. But you see, maybe something like this. You see how you have a line above here? Maybe the closer you get to New York time and it starts to break these highs, you're going to have a higher probability that this time your running trade is going to be a running trade. Like this. In line with like maybe pre-NY or NY open, that you can have now a situation like this. Because what's going to happen is sometimes this could be the case. You take a trade early in the sessions. Maybe this is pre-London. But then London just has been consolidating. So that's why I'm saying, like, recently, New York session, 2 hours into New York is when these distributions have been playing. Like these daily continuations. Even the pre-London time, we don't have no continuations pre-London. London session's been consolidating, so you can expect this. Oh, so far you agree to what I say? Awesome, AD. Awesome, awesome. I'm gonna head out here, everybody. Hope you all enjoyed the session, and catch you tomorrow for Freaky Friday. Let's go, boys. See you then.
No time for this slip, homie. Now we bout to dip.